Welcome back, y'all. It's another week, 9 to 5 Sunday service. Once again, Mr. Smart Money here with my host, Mr. Black Pharaoh, the Queens, Sean and Sade, Tashana, as she would like to be called. And it's another 9 to 5 service. And the rest of the 9 to 5 crew, we in the background. We got Mark, Abby, and T.
And Andrew. Andrew with Mark.
Oh, and Andrew with Mark.
Yep.
All right, let's get the disclaimer thrown out there real quick.
Yes, sir. Okay. Welcome to the 9 to 5 investors. We are not financial investors or fiduciaries. All information we offer is strictly for entertainment and educational purposes only. Investing in the stock market does have inherent risk involved, so please do your due diligence with any move that you should make or partake in the stock market. Any company you invest in, be aware that there are risks involved. We are not directing you to invest in any particular companies. We are just talking shop. This is for entertainment and educational purposes only.
All right. So last week with Godfrey, we put in the limit orders for his watch list. This week, as we all know, the market was red. A lot of those limit orders triggered. We picked up multiple positions. The only one we wasn't able to grab was Delta. Everything else we did acquire. So we got some Neo
and Moderna. We picked up Blink, Neo, and Moderna. Three out of the four that we targeted. He's added them to his portfolio last week.
And last week for the lesson, we went over market capitalization. This week we'll be going over asset allocation and diversification. So with the slideshow, this is episode 6, The Adventures of God.
Okay. This is Adventures of God, episode 6. We'll be discussing diversification. Okay. Now, last week we talked about the sectors, the 11 market sectors, the 11 sectors that comprise the market. We went over the sectors. They were energy, materials, industrials, utilities, healthcare, financials, consumer discretionary, consumer staples, information tech, communication services, and real estate. So those are the 11 sectors that comprise the market. We also discussed the different market cap classes last week. We discussed the large caps. The large cap companies are the companies with the market cap value of $10 billion or more. Now, they also have mega caps that are extremely large companies. We can go into that, but for the three main classes, large cap established themselves as leaders of their respective industries. Large cap companies have proven to be capable of holding off competitive threats, and they usually pay higher dividends than some of your more smaller companies. Next, we have the mid caps. The mid cap companies have a market cap value between $2 and $10 billion. They have often made considerable progress in building successful business models, and they often operate in smaller niche markets. The next one we have is the small caps. These the go-getters. They new on the block. Market cap value between 300 million and 2 billion. These are generally referred to as growth stocks, and they're more volatile than large. They would be more volatile than your large cap companies. So we went over. So that was sectors and market cap last week. Now we're going to get into diversification. Diversification is a risk management strategy that mixes a wide variety of investments within a portfolio. A diversified portfolio contains a mix of distinct asset types and investment vehicles. Remember that, investment vehicles, in an attempt at limiting exposure to any single asset or risk. The rationale behind this technique is that a portfolio constructed of different kinds of assets will, on average, yield higher long-term returns and lower the risk of any individual holding or security. So in diversification, so it says contains a mix of distinct asset types and investment vehicles. So when we say asset, a mix of asset types and investment vehicles, what does that mean?
You want to put your money in different sectors.
You on mute?
Don't put all your eggs in one basket.
Right.
Hello?
You can hear me?
Yeah. We can hear you.
Oh,
You can't
okay.
hear us.
Yeah, okay, I hear you.
Darius is saying diversification. Don't put all your eggs in one basket.
Right, but when I say a mix of different asset classes and investment vehicles.
The asset classes, I believe talking about like stocks, bonds, commodities, real estate, stuff like that.
Yeah,
Right.
futures.
Okay.
Right. There are 17 different asset classes to invest in. You got precious metals. We were talking about earlier about the NFTs. You got artwork, memorabilia. You have the bond market. All these are different asset classes that you can invest money in. These are considered assets. When we talking about investment vehicles, we talking about retirement accounts, Roth IRAs, life insurance policies, things of that nature. So when we talk about diversification, I don't want you to think in terms of just stocks.
Right.
We talking about diversification across the board. You got a life insurance policy. You own equities. You also own bonds. You also own precious metals. You put money in gold. That's how you diversify. That's the larger scale of diversification. Okay, we diversify because diversification is a hedge. It's a risk management tool. Why do we diversify? Because diversification provides us protection versus the downturn in any single asset class or investment vehicle. Not any single stock, any single asset class or investment vehicle. If you notice at certain times of the year, the stock market is down bad, what do whales do? They take their money out of stocks and they go and buy gold or bonds.
Yeah.
See, they diversify themselves. They use things like crypto. You can add crypto in there. If the market is too turbulent, I'll take my money out, take profits, take my money out, and rather than just leaving it on the sideline, I'll jump into a whole new investment vehicle until it's safer waters in the stock market, then I'll come back. But that's how the whales that's how they stay diverse. They buy gold. They buy commodities. This is diverse. Oh, go back. I ain't finished. All right. I forgot, I got to finish. Diversification also offers protection versus downturn in any single industry or sector. Now we're talking about the stock market. We discussed the 11 different sectors of the market. And inside those sectors, there are different industries. Inside the tech sector, for example, you have the software industry. You have communications industry. You have different industries within inside the tech. Even finance, if you want to say finance. Because companies like PayPal and Square, these are tech companies. They just operate in the financial industry. So the industries, different industries within inside the sectors, there are 11 sectors. We said earlier about the tech sector taking a beat in the last couple of weeks. Well, if we properly diversified, then our portfolio will reflect not only the tech sector, but all 11 sectors. Diversification maximizes your overall upside of your portfolio. The less money you lose, the more money you can be made from that money that you did not lose. So you want to maximize your earning potential. Tech is not going to always outperform the market. It fluctuates. Sometimes it'll be the financial sector outperforming the market. Sometimes it'll be the travel sector. But you want to make sure you have at least a couple of eggs in all those baskets. So when they go up, you benefit. Okay, how do we diversify? Well, like I just discussed, we consider the different market sectors. We diversify through ETFs. ETFs offer built-in diversification because they hold a multitude of companies across different sectors. So you buy one ETF and it's like having exposure to 10, 20, 30 different companies. We also periodically balance and rebalance our portfolio. We want to make sure that our portfolio is not too heavily invested in one sector. We don't want to be too heavily invested in our portfolio to be too heavily weighted in tech, because then when the tech sector starts to underperform, our portfolio will underperform as well. So we always want to make sure we balance. We always looking at our portfolio, balancing, rebalancing our portfolios, make sure that we evenly weighted across the board. A good tip, the S&P heat map, you can find this on finviz.com. The S&P heat map displays all the sectors and all the industries. You can look at, they update this periodically through the day, every day. You can look at it every morning and you can see what sector the market and what sectors are underperforming the market. And from here, you can see what companies lie in what sectors. So you make sure you use the heat map. That's a good tool to use to give you a visual of how the different sectors and industries are performing. Like I say, you rebalance the portfolios, utilize ETFs, diversification. It's a hedge, and it could save you a lot of money. A lot of people took a loss this week, the past few weeks, because they wasn't diversified. It's a bull. What Kramer say? It's always a bull market somewhere. You just got to find it, and you got to be exposed to it, have exposure to it. The easiest way to do that, like Abby was saying earlier, just buy the ETFs.
And that leads to the next point. kind of add on to diversification, asset allocation. Y'all know the difference between asset allocation and diversification? Yeah, no,
No, it's
maybe so.
teaching.
What you said?
Nope.
I know the difference between asset allocation and diversification.
Mm-mm.
Yeah, no, I guess.
I'll wait on this. I will after you tell me this definition.
Oh, I thought somebody was saying it in the background. The main difference in asset allocation and diversification is asset allocation is looking at the percentage of weight that you have exposed in whatever your holdings may be. Like, let's say you got some tech, some healthcare, some consumer staples. You will look at how much of your money is actually divvied up into each one of these sectors. And that's how you want to balance your portfolio. Like, say you got 75% of your whole portfolio loaded up in tech, but you got 10 different companies on there. You might think you diversified because you got exposure to different sectors, but as far as weighting and the way your assets allocated, you overweighted in one specific sector or one specific holding. So you want to look at how much weight you putting into your positions and try and keep that balance. That's another part of balancing your portfolio. When you look at ETFs and you check out they holdings, you'll see they got 8% in one company, 10% in another company, 4%. That's them looking, that's how they allocating their assets. That's their asset allocation. You looking at what they putting their money at. You see that it's diversified, but now you see how the money is allocated amongst those holdings. So that's another key part to keeping some of your earnings and keeping your eggs spread out. You want to look at how much you putting into them baskets too. Try and balance out the percentages. I don't got no key setup that you should go by. Ideally though, I like to try and keep all my holdings equal, like 25%, 25%, 25%, but I'm gonna have to do a little more studying and figure out a strategy that I feel like gonna work better for me. But with my theory, I like tech more, so more than likely I'm gonna be a little heavier weighted in tech than the other sectors in my portfolio. But that's basically the difference of asset allocation and diversification.
Yeah, most people gonna be heavily weighted. They're gonna be more heavily weighted in one than the other. That be their realm of expertise. But they are weighted in the others. But they may just be a little heavier in travel. They may be a little heavier in energy because that's where they have the most intimate knowledge of. That's where they're most comfortable operating in. So I wouldn't put a percentage on how you should have it allocated. It's kind of like up to you. But just keep in mind that you don't want to be too overweight in one particular asset class.
Everybody got it?
Yes.
Yeah, I got you.
We're just gonna say Waldo?
Oh no, I wasn't saying that. My bad. My phone wasn't muted. My bad.
All right, so we're gonna move over to Godfrey right now, and take a look at his portfolio. Let me pull it up. You got one share.
Go on Discord, so I mean, you can. Oh, you don't have it.
I don't got it on this computer. You got one share of ARC, 5 shares of Blink, 2 shares of Moderna, 7 shares of Neo, and 1 share of VTI. All right. The homework for this week was supposed to be presenting your arguing cases for who we should consider to add to his watch list. Did anybody complete the homework?
I did some of it.
Yeah, we need that. We need to add companies to his watch list, keeping in mind diversification.
Yeah. Consumer
You gotta
retail is one.
Consumer
I think
retail.
he should add, yeah, consumer retail, you know, your Macy's,
Macy's, I like that one.
your department stores, because things are starting to reopen now. Major push towards, travel, airlines. See, they're doing good on that. Things starting to reopen. So anything you can tie to, like you even see in the news now where some airlines want you to show your vaccination papers before you get on board.
Mm-hmm.
See what I'm saying? And
Yeah.
then also think, I think entertainment, although it's down now because everything was down, I think entertainment is going to be up because you got a bunch of artists that's ready to get back out there.
Yeah.
By, I'm thinking June, July, your Live Nations, you know, stuff like that. They're going to, Ticket Masters, they're going to be back in the game.
Mm-hmm.
I think around July,
That's my thoughts, Mark.
Yeah.
August.
Shoot, the IHOP I just came out of was packed. Wasn't a single seat in that joker. So you know good and well these people ready to go to concerts and see whoever.
Ready to come back out.
Yeah. They ready to do their
no
thing.
artist
Man.
ready to get back on the road.
Yeah, I noticed.
So we know once it do open, everything going haywire. The airlines, people gonna be flying, people gonna be taking cruises. The cruises gonna be booked up if they ain't already booked up.
Yep.
Everything
So
gonna
a lot
take
of those
off.
sectors, a lot of those companies in those sectors went down this past week after that illustrious street speech that Jerome Powell gave. So, but they'll be coming back.
Mm-hmm.
Right. But the speech, like I was telling Darius them last night, Jerome Powell gave that speech in an attempt to appease the nervousness that was going on in the market before he spoke. See, the nervousness came from the inverted yield curve. The yield curve, yield's been creeping up.
Explain what that
which
is.
Made investors,
Explain what that is real quick.
The yield curve.
Yes, sir.
Yeah.
Okay, let me get the technical definition. Because I don't want to tell y'all nothing wrong.
Right. Like we said, do your own research. Even after he said it, go look it up.
Mm-hmm. A yield curve. A yield curve is a line. We're talking about the yield curve. A yield curve is a line that plots yields, interest rates of bonds having equal credit quality, but differing maturity dates. The slope of the yield curve gives an idea of future interest rate changes and economic activity. There are three main types of yield curve shapes. Normal, that's an upward sloping curve, inverted, a downward sloping curve, and flat. What we don't want is for the yield curve to be inverted.
Right.
Because when it's inverted, it's pointing downward, it's downward sloping, and that could potentially point to economic recession. What's happening is the market, the yield curve is telling the market that interest rates finna go up, inflation finna go up, and that's gonna eat into your profit.
Yeah.
So the market all this week and even last week, going back to the last week, the week before that, when we just passed, the market was experiencing turbulence because the interest they was fearing that the interest rates was going to go up as illustrated by the yield curve.
Mm.
As the yield curve started to invert, investors say, man, this look like inflation coming, right? Inflation around the corner. So they start to pull their money out, which caused the stock market to go down in certain sectors. Now combine that with the market correction that's going on in tech, and that's a bad recipe. See, right now in the tech sector, we're seeing a lot of market correction going on. A lot of these companies ran up and was overpriced. All these months we've been sitting in the house shut in. A lot of these companies ran up way past their valuation. So now we're seeing the market correct and these prices coming back down closer to their more realistic price.
Right.
But the inverted yield curve, what's the name? Ian on Earn Your Leisure, he always say, keep an eye on that inverted yield curve. He always say that. And now we see why. Jerome Powell came out and spoke. What, that was Thursday?
Yep.
It was Thursday. He came on at 12:10. He came on at 12:10. The market didn't start rebounding until Friday afternoon. See, even after he spoke, he came out, he spoke to appease the investors. He was telling them, no, y'all ain't got to worry. Y'all don't trip about the inflation. We might experience a little bit of inflation, but it's going to be temporary. Don't trip. But the market was saying, nah, bro.
Yeah.
I hear what you're saying, but I don't believe that because I'm looking at the yield curve.
That curve, yeah.
Right.
The curve telling me something different.
I think they kind of overreacted a little bit. That's why I think it came back so quick.
Right. You see, he spoke Thursday afternoon. He spoke Thursday afternoon. The market didn't start turning around till the next day after lunch. People went home and slept on it. And say, you know what? It might don't be so bad. We just overreact.
Well, but now it's got all that ground to make up.
Right. But this the thing. As investors,
it's on sale.
We should have been picking up stocks.
Yes, sir.
These past 2 weeks. We should have been buying.
It's a sale going on. That's right.
Yep. Because when it recovers, and we know it will, we'll be better positioned.
And that's why it's great that we use Godfrey too. That was living proof right there. We all watched it from a paper trading account. We set limits. That shit dropped. We picked up shares at a great time. It's as easy as that shit was for Godfrey. We could do the same thing.
That same exact strategy.
I forgot they set limits.
Set the limit by. Set the limit by, and then go live your life.
And let it go. It's gonna come up.
Let it go.
Yeah.
We set those limit buys on Sunday. On Tuesday, Neo hit our target price. He picked that up. Wednesday, he didn't pick nothing up. Yeah. Thursday,
Joker went shopping.
Moderna, yeah, he went shopping. So it took a couple days, but we got those stocks at the price where we felt comfortable getting them at. Because we charted it out, we found support resistance, we identified entry points, and we set our limit buys, and it worked out.
Yeah.
We can use that same thing. That's exactly why we do it with Godfrey, to show you how you can approach the situation.
Hey, let's press.
So the only one that didn't get executed was Delta?
Yeah, Delta's still out there.
Okay.
Hey, y'all, let's press pause real quick. We got a new member in for the day.
Okay.
Who that?
Latriva, I hope I'm pronouncing your name correctly. How you doing? Go ahead and introduce yourself and let me know if I got your name right.
Okay.
Hi, yes, my name is Latriva.
All right. Peace.
Welcome, welcome.
Thank you.
So tell us a little bit about yourself. You
Oh,
new to investing, how you got here, what you're looking for, what you hope to get out the market, something like that.
Yes, so I'm a beginner in stocks, and got here. I can't pronounce her name. I don't know if it's Tasharna.
Yeah, you got it right.
Oh, okay.
T-Lynn.
Okay, yes. So she
Tashauna.
invited me into the group. I was seeing her post on Facebook, and it was like, 9 to 5 investors. That's interesting, because I'm trying to, because my goal is to become a full-time investor. I'm a realtor, so I have kind of like time throughout the day. So yeah, that's my goal. That's why I came in, to just find out more about charting. That's really what drew my attention. I saw her program or her background, and I was just like, I thought it was Forex, and I was like, what is this? So that's what piqued my interest, and I was like, I definitely want to learn more about it.
All right, well, you in the right place. 9 to 5 investors, we promote financial literacy, to improve our families and our communities. That's what we all about. We primarily deal with stock market trading, but we also have exposure to real estate and any other asset classes that we can invest in, life insurance, things of that nature. And we meet once we have these meetings every Sunday morning, Zoom meetings. We like to call them Sunday service, and we get together and we go over principles and investment principles and strategies. So welcome to the group. And you in the Discord. That's another way we keep in contact throughout the week and keep everybody up to date on any announcements or whatever.
Awesome. Thank you.
Hey, Latriva.
Hey.
About the Discord, though, I think we need to do like a Wednesday Zoom or Thursday Zoom for the OT on the chart session. Like,
yeah.
And the queens will run the chart session.
Yeah, for our Thursday and Friday moves.
Yeah, that's cool. That's cool.
Talking about a midweek service, huh?
Yep. Something like Bible study,
Mm-hmm.
choir rehearsal, usher board meeting, deacon board meeting,
come up with a jazzy name for it.
Because even with knowing like the fundamentals, like we all learn fundamentals first on the tree, but we'll catch you up to speed. You can private message me or you can call me and help you out. But even all the fundamentals that you can't do nothing without that chart. Unless you're just gonna be guessing. You need you gotta need the fundamentals and you need the technical analysis. You gotta put them together. And once we put them together, we just start putting it together like in January with the charts. We got heavy in the charts in January. We definitely see an increase in our portfolios because it started making more sense. Is you no longer guessing, like we can tell you, yeah, McDonald's is a good company to buy. Any company is a good company to buy, but when? You can buy McDonald's today, and I say, nah, I'm gonna wait, and I buy 2 or 3 more weeks, and my portfolio look better than yours because you bought too early or maybe you buy too late. So you got to put the charts with the fundamentals, and you on your way. And me and Shine T, we got you.
Thank you. Thank you.
So
Darius, Jermaine, do y'all ever put other charts over yours, like Bollinger's or any other bandwidth charts over yours?
Yeah, I play with the Bollinger sometimes, but I don't really use those. I don't really trade off of them. I just put it on us sometime to see how it look.
Yeah.
Yeah, in comparison to what you're charting.
Right.
Yeah.
But I hear a lot of shit talking. What's up with the 4th quarter challenge this year? I mean,
can
we wait till the market correct though, Bernie? Can we wait? Because they just
that's a great starting point.
Yeah, what you gonna wait for correction for?
Why do we have to wait till the 4th quarter?
Because that's when I want to turn it on.
Yeah, because he needs some practice. Shine, T, what y'all say? We ready right now?
all right.
And if we keep putting stuff like we pulled on Friday.
Now look, see that?
Oh yeah. Oh yeah.
One good week, and now she ready, huh?
It's gonna be every week, good weeks. What you mean?
Just remember, every week.
Let's see.
Every week.
I'm gonna be
Don't
talking.
take losses.
Last time I took a loss on the quarter, man, I ain't lost a quarter, and I don't know.
Every week we gonna eat.
Every week, right? So,
Who is that?
just to let everybody in on it, Friday morning, me, Sean, T, and Jermaine got together and we said we're gonna trade together. We learned a new strategy and we wanted to test it out. And I had tested it like 2 weeks ago and I failed miserably. I messed myself up. But I said, okay, you know what? I'm gonna take a break. I took a break 1 week. We got together Friday and we killed it. We had like $500 in 1 hour.
Yeah.
We was doing our thing.
Yeah, they did. Yeah, they did their thing Friday.
So you said y'all traded together?
Yeah, we traded together. We was all watching.
Yeah.
Oh, okay.
Trading together.
Yeah, they did a little scalping.
Ain't that?
Oh, scouting together.
Yeah, they did a little scalping.
You know you was in here.
I
Hey, Nat, on her. Hey, Nat.
Yeah,
Yeah,
I sat
thank
there
you,
and watched
sis.
them
My
make. I
sis
sat
know
there and
my
watched
voice.
them make all that money.
How much they did? How much they made?
500 an hour.
Yeah, so they made like
Okay.
5. How much you made?
380.
Yeah, Sean made like 380. T made like what about 3 something?
Yeah.
Oh,
Nah,
T
chill,
probably
not
T.
for. I traded
Yeah.
in Robinhood and I did TD too. It was
Yeah,
like
me
three,
too.
Man, I
three
thought
something.
family. We couldn't get a family dinner to celebrate the victory, and man,
Man, they cheat, man. They cheat.
Nah, we got y'all. We got y'all.
We at least got a $5 pizza or
I
something.
need my money for Friday.
Got you a little Caesars, huh?
Yeah,
Yeah.
they should have got you that hot and ready. You feel me? They shoulda got you
Hey,
that
I
hot and
couldn't
ready,
even.
bro.
I couldn't even buy the motherfucking contract because my money wasn't settled yet.
No, they had you sitting listening to all that shit. You couldn't even.
Yeah, they got me sitting over there making all the damn noise.
We was lit, boy. We was lit.
Go down. So we was over there like, we're in the auction. Can we get a 32, 32, 32?
Yeah.
You didn't use your
I
margin on
ain't worried
TD?
about it because I'm up 1,000% on my Exxon option.
Shit, yeah, Exxon. I'm kicking myself in the butt. Man.
I ain't never been up
I think that's proof.
1,000% on nothing.
Man.
I think Exxon Mobil is proof that you can't just always get a stock and then get mad at it when it don't perform in a month, right?
That's why you got to hold them for
How
at
you
least
sound?
a year. At least a
Yeah,
year.
at least a year.
So
I had about 20 Exxon Mobil, man. That junk wasn't doing nothing. Now, next thing I know, boy, I could have been up at least 2,000, 3,000, 4,000.
See, Uncle Mark,
at
using your
least.
feelings. Using your feelings and got out.
Yeah. I remember dumping them too. Marathon
And
too.
so many companies.
Marathon.
So many companies
yeah,
I remember
man.
holding, and now they up. So many companies I had and I sold because I got tired of them, and now they up.
What we had got for the low? Then we had Snap. Then we had Snapchat.
I learned my lesson on that.
Yeah, you got to hold them at least a year.
I felt all
What y'all
mine
think
in my
about the new
portfolio for a year already.
what y'all think about the new ETF that's out there?
Buzz.
That social media Buzz.
Yeah, Buzz.
The only
That's gonna be
reason I really
big.
don't like it is because they got fucking GameStop, man. I don't want no parts of GameStop in my portfolio like that. They take GameStop out, I might grab them, but they rocking with GameStop, man.
They trading at $23.
Yeah, it's real cheap right now.
I like their theory behind it, though, how they setting it up based on some of the social media buzz. I give you some of that.
So they just making money off what? Data collection? Just anytime somebody use a website or what?
Who, Buzz?
All those membership-based social media accounts, Snap, got TikTok, Facebook, Google, Twitter.
Fans only that's tied into them. Things.
Yep.
The Reddit thing.
Reddit
too.
Yeah, they probably. They probably
Reddit's
gonna
in
add Reddit when Reddit IPO. They probably gonna add Reddit too.
Wow. Okay.
So I guess
Even
what
shit
the
like
benefit of
Robinhood.
having. I guess the benefit of having the GameStop is what? Because people buy all those little cards to register for their games on.
Yeah, I think that's gonna be GameStop business model moving forward. They're gonna get out of the fucking have the game
brick and mortar.
Yeah, they're gonna get out of the brick and mortar shit. It's gonna be online membership, a membership type thing. I already got a membership with GameStop. They got a membership program already, but I think it's gonna be more catered towards that online. They probably
But
sponsor some.
GameStop is not streaming though, is it?
Nah, they don't have a streaming
Okay.
service, but they'll probably offer shit like online gaming tournaments, discounts, exclusive content, merch.
Shit, all that money they just made.
Yeah, you know the gaming industry, that's like $1 trillion industry.
Mm-hmm. Yeah. I
So
see
they'll do something.
those entertainment venues coming up too, like for real this time. AMC look for real this time, you know.
Yeah, because they opened them back up in New York.
Yeah, IMAX.
Yep.
Yeah.
So it's still a market out there for moviegoers.
Is there any other state besides Texas who's lifting up the face mask mandate statewide?
Minnesota.
Yeah, Mississippi.
Mississippi.
Mississippi 100% open for business.
Just think red. Yeah, think any red state.
What about health? What about health stuff? Since they doing all this, and what if we have an explosion of COVID after this is done?
Then the health sector gonna go back up.
Yeah. I mean,
yeah.
I ain't really mad at Texas for that because somebody got to be the first one to do it.
Mm-hmm.
They
just gonna be the guinea pig.
They was always the one already bucking the system though, and then Florida followed. They already the first one to have clubs and things open anyways.
Mm-hmm.
But like Mark said, I think it's mostly about the red states, because even in the beginning when they were lifting restrictions, it was mostly coming. The more strict states were the blue states.
So when
and the red states were more loosey goosey.
When things reopen, what's some players y'all looking at as far as recovering?
I'm looking at the airlines and the cruise.
Travel for sure.
Airlines, travel, entertainment, retail. Yeah.
I'm also looking at the banks too. When they open up, the interest rates will go back up.
Financial, consumer spending, travel, leisure, gambling.
Yeah, I'm looking at the banks, waiting on them to get off those bonds.
Yep. When they hit maturity, no bonds hit maturity.
Mm-hmm.
So some of these companies went up during COVID. When they open, we got other companies that's going to take off. Think that's going to negatively affect some of these companies that were just hot for COVID?
It's already doing it. Peloton was down like 17% this week. Zoom been down. I ain't looked at Teladoc, but I'm pretty sure they probably underperforming.
Well, was down. Nah, yeah, they went down a little bit, but I don't think they was up from COVID though. Well, yeah, they was up from COVID because all that contactless shit came into play.
When people weren't going to the hospital.
Yeah, because pre-COVID and in March, where was that $32? They had $216.
Damn.
Teladoc, yeah, Teladoc was one of the stars of the pandemic.
I'm talking about Square.
Oh, Square?
It was on March.
Pre-pandemic, she said it was $30.
Yeah, March 18th of last year, it was $32.
Now they $200.
Yeah, see, remember I told y'all yesterday? I told you yesterday, I bought AMD last year for $57.
Yeah.
Shit was cheap. Like, what's going on right now, as far as the market, it's no different than it was last year. Everything was bargain basement prices when we got in.
Mm-hmm.
It's the same thing right now. It's a good time to get in the market because everything cheap.
Yeah, they selling these stocks like the trunk of their car.
Yep. When you gonna ever get Apple under 120?
That's why we got to pay attention to these percentages. It ain't just about the dollar amount where the stock's sitting at. These stocks dropping like the same percentages to match the pandemic, 30, 40, some 50 and 60% right now on the same percentages we've seen during the pandemic. So don't always look for it to go to that exact same price, but we see that same percentage action. It's time to take action again.
Right.
Mm-hmm.
Right, because we kind of got in. When we got in, a lot of these companies, these stocks was going to the moon. And they don't really they don't generally grow that fast.
You got to echo.
But because we had zero interest rate, we had a lot of quantitative easing going on in the market.
You got to echo, G.
It kind of accelerated. So now,
Jermaine,
what's up?
you have an echo. Ladarius said it like 5 times.
Oh, I can't hear him. Hello?
Yeah.
All right. Man, I got an echo too.
Somebody
Hello?
got to mute. Everybody has an echo.
I got 2 mics open.
Hello?
Hold on.
Yeah, that's better.
Okay, there you go.
That's better.
Yeah,
Okay.
there's too many mics on.
Yeah, this
What
past year,
about go ahead, Jermaine.
this whole past year we've been investing, the market pretty much been on training wheels. We've been riding the bike on training wheels with the quantitative easing. Going into this year, that quantitative easing they're gonna start taking it away. So now we're gonna see who can really ride a bike without the training wheels.
Mm-hmm.
But what we should be doing at this time right now, we should be buying these great companies. We should be buying Apple. We should be buying these airline companies, these cruise companies, these banks, Wells Fargo, Bank of America. We should be buying them while they cheap.
And if you still believe in the future techs like the EV, Blinks, Neos, all them, it's great times to buy right now.
Mm-hmm. Look at the EV sector down right now. Look at Neo. Neo down to $30.
Yeah,
Neo was just $60 a month ago.
Look at Tesla. It was just about to touch 800. Now it's back under 7, like 6 and some change now.
When you think you're gonna get Tesla in the 5s again?
Yep.
It's a good time to be buying.
Yeah. And what was Tesla when Willie what's the highest point they hit? Wasn't it like 15 or something like that?
Tesla.
Oh yeah,
No,
because
no,
he
no.
got split
They
when
was
they was
at 2
high.
grand. It
Yeah.
was 2 grand.
God damn.
$2,000. Yeah.
And then they split.
Yeah.
Yeah.
Then they split. Yeah. Yeah. So
Almost $900.
And then even
yeah, I
after
think
the
it's
split, after the split, it went
Yeah, I
up
think
almost
it's
to 900.
Yeah, they was at 900
Yep.
on January 25th. Now they back at 597.
Yep. But we know what type of company
Y'all
Tesla is. That's a
Y'all
fail.
think it's a good time to go put shopping on some of these companies that's been living off the pandemic, like you was just saying earlier, like the Zooms and the Peloton, all of that type stuff.
Yeah. The question
Yeah.
was, how far do you set it out?
That's what I might have to study a little bit more.
Yeah, I would do
I think
puts.
it's kinda-
I would do short term.
46
I think it's kind of
weeks.
late though, like for the put, like you were
Yeah,
saying.
last week.
Mhm.
Yeah.
Like a lot of the stuff that's going down, it's already down. Like
Yeah, it's
you were
bottomed
saying.
out.
Yeah, like you were saying, we had Tesla, like it was at 900. Now it's at 6, almost damn near under 600.
Yep.
You know what I'm saying?
Yep.
So like
Yeah,
doing
but-
puts now, that's kind of risky. Now I think it's a little late to the party.
Yeah.
Well, think about it now. Think about it. So the company that you just mentioned, Tesla, you know they coming back, right? Tesla wasn't living off the pandemic,
Right.
right? But Peloton was. You could stay at home, working on your gym. You know, now, you know, with everything opening back up, your gym's gonna be open. So does a Peloton subscription service, the demand for it go down? Is my
But
Well,
it
we'll have
it
to
already
see.
dropped like
We'll have to see
50%.
if those new Peloton subscribers, if they gonna go back to the gym.
Yeah, that's what I'm trying to evaluate
all
right
right.
now.
Because think about it, right? Last year you spent X amount of dollars to put a home gym in your house. You bought all this
Mhm.
Peloton equipment. You done paid for the subscription. Now the gym back open, but do you really need to go to the gym now?
Right.
You got the gym at your house now. What are you
Mhm.
gonna do with all that equipment you bought? See, a lot of
Yeah,
people not
that's
gonna
true.
even
You
go
got an
back to the
investment
gym.
now.
Yeah, because they already done
Mhm.
adjusted. They done got more comfortable working out at their house. A lot of people not gonna go back.
Just like some of
Right.
the businesses keeping their employees at home. They done find out they can operate without the actual office.
Yep.
Yeah, cheaper. Yeah.
So we gotta
That's
see.
what
We
we
gotta
gotta
see what the new
evaluate.
normal is gonna be.
Yeah.
Yeah,
Mhm.
I think with the put thing, you just gotta take it scenario based. It's just company by company.
Mhm.
Yeah. You gotta watch.
Mhm.
I'll be doing like short term, like a month maybe. Get out within
Yeah.
like
Yeah, at best.
In and out. It's always more riskier to play puts because you actually you going against the trend. Even though we down now, but the overall trend of the market is always trending up.
Right.
So puts, you got to do more timing. Whereas with a call, you could just set it out for a long date
And let the market do what it do.
and let it do what it do.
Yeah.
Puts, you guys take more time. You got to be in and out.
Yeah, I just looked at Peloton. It had a high like 168, and now it's
Right.
at like 106 right now. So like the put, like you'd have had to be in there at like the 168, 165 or something like that,
Right.
and then
Okay.
like watch that drop. Like it's already down.
Yep.
So I mean, it might keep going down, but at this point, it's like, you know what I'm saying? It's like you really just risking. You know what I'm saying? You late to the
Right.
party.
Right.
Yep. And times like this right here, they also finna show you. They also finna make you question why you even invested in these companies in the first place.
right on that bad.
Mm-hmm.
Because a few months ago, it was easy to look at a stock like Peloton and say, "Oh, yeah, that's a good company," because the stock going through the roof. But now that the stock not going through the roof, do you still feel as bullish about it? The fundamentals ain't changed. Only thing changed was the stock price. So now you're going to have a bunch of companies in your portfolio that not performing as well as they once was, and you're going to be questioning, damn, why did I even get them? Is this really a good company? Do I really want to hold them long term?
Mark, if you're looking for a put to continue on Peloton, the lowest I see it possibly continuing to go to, right, $80. So it ain't got a lot more room. Right now, it's really towards the bottom, like you said, looking at it on the chart, it's really bouncing off the 50 right now. So kind of towards the bottom.
And it's at what? It's trading at what right now?
It's 105 right now, and it's bouncing off the 50.
Oh, yeah.
And because of that downward momentum, those puts probably sky high right now.
I'm gonna tell you what.
Yep. Yeah.
That's what he meant when he
especially
said
if you
you
go on
late to the
short
party.
term.
That's what he meant when he said you late
especially
to
if
the
you go on
party.
short term.
Yeah,
Okay, I didn't know they fell. I hadn't looked at it. I just thought they was down to 160 or so. Okay, I didn't catch that. Yep. Yeah, it's over.
We just pulled it
The
up.
$80 puts was like $200.
See, them bitches sky high.
You'll put all the way out, further out.
It's gonna be sky high.
Yeah,
it's gonna be more risky.
So, and you're taking a big risk.
It's gonna be more risky to fall than to put out.
Yeah.
Yeah, like with the put, I wouldn't do like a long term put. Like that's just like, in my opinion, that's just too like risky. Like if you want to do a put, I would do a put like it's at 105 right now. I put at $100 and let it run down. As it run down to that 80, you'll be more in the money. You know what I'm saying? I wouldn't
That's
put
how I would do it.
a $80 put and then hope it get down to 80 because you ain't never gonna be in the money. You see what I'm saying? So if you put it closer to the 105, say you put it at put at $100 put. So as it hit that $100, now as it's dropping, your percentage is running up.
Yeah,
but if you put it at 80,
800.
What's that?
$100 strike. He said.
I said
no, they cost.
Probably gonna cost you about 800.
If you do $100 put and you want to go to like July, you're looking at 1500.
1500.
Yeah.
If you want to go to April,
yeah, that's what I'm saying.
If you want to go to April, it's $700.
See,
well, you could take,
I figured,
or you could take that same money and play a long-term call. Because right now,
I'd rather do that.
Momentum, because the short-term momentum of the company is going down. Those put contracts now, they cost a lot of money. Because everybody it's a lot of people out there buying the puts now. But as soon as that company bottom out, it's gonna reverse.
A long-term call.
Right.
Shit. Shit.
How much a long-term call is?
Thousands, 24,000, 16,000. You want to do
Yeah.
you want to do $140 call for January next year? 15 grand.
See,
Yep.
I'd rather do that than spend 15 for it to go to 80.
Oh yeah.
I put 15 grand.
Knowing that their goal is to stay in business. Yeah.
$15,000?
Oh, I thought you say 1,500.
No, $15,000.
Oh.
Nah, I wouldn't do it. I wouldn't do that.
Yeah, that's
just a bad example.
Yeah, I wouldn't do that. You gotta find some cheaper contracts.
Oh yeah, nah. But trust me, by the time Monday come around, I'll be doing some options on some of these other areas I just mentioned. Like I said, I'm gonna probably do one, see what Live Nation look like out around June, July in that area. August.
I'm looking for some options. Financials is definitely some cheap options. XL,
There's some cheap ones out there.
XLF, ARKL.
Yeah, you just got to look around. You'll find some cheap options. Some companies with some cheap.
Oh yeah.
Then you'll find some companies with some expensive ones.
Yep. Yep. So if I had enough money, boy, I sure enough put a contract on Tesla. I know that's coming back.
You gotta learn how to spread on.
I look at
do your spreads. You can get
the spread option.
That's what I got. I got to learn that. I heard Willie talking about that last week.
I'm gonna give you a simplified.
Yeah, I got to learn that.
Spread, and that's all we really do now.
Yep.
What's the spread? Explain the spread to me again.
A spread is simply buying a call and selling a call with a different strike price. So I'm gonna buy the lower price call and sell the higher price call. Now, the difference between your two strike prices is gonna be the max profit that you can gain. You want it to be, you want the stock to end above your top price for max profit. So for example, if we do an Apple call, let's say we're gonna buy the 125 call and sell the 135 call. Now the difference between 125 and 135 is $10. You do that $10 by your contract,
right?
Max profit could be $1,000. Now, your the price of your spread is gonna be the difference between your two contracts. You know, the premium on your contract, they gonna subtract the higher from the lower. That's gonna be the price for your spread. That's gonna be locked in. That's the most you could ever lose. The most you could ever gain is the max profit between your contract, which is $1,000. So in this, with the spread, your profit and loss is already defined. It's kind of a safer bet to running on the expensive calls or puts. You get in for the cheap.
And the spreads make your contracts cheap. They make the contract cheap because you only paying the spread. You're only paying the difference between the two contracts.
So, Mark, let me give you an example. I'm gonna pull up Robinhood.
Give me an example.
So they have 596. What do you think they can go to? And which one's your expiration date to be, and which one's your strike price to be?
You say you're pulling up what?
Tesla. So you want to do Tesla? Okay, so they have 5.
Okay. So they have
96.
596, right? And you saying, what do I think they can go up to?
Right. What do you want your strike price? What do you think they're gonna end at? Which one's your strike to be?
You mean within what period of time, though?
You tell me. What you want your expiration?
Oh, okay. All right. I want my expiration on Tesla to be, what are we in, March? I want it to be the end of April, and I want them to be at 650.
Okay. So we'll do April 23rd. We're gonna do a 650.
Yeah.
Okay, right now, just say if you brought that call it'll be a naked call, right? It'll cost you 4,600. No, that's 46,000.
$4,638.
Yeah, $4,600.
Okay.
Okay.
And that's the difference. That's the difference between what it is now and where I want it to be, right?
No.
That's your premium.
That's just if you bought it just without doing the spread. Just right now, it'll be $4,600. Okay. But
Okay.
if you did a spread, what you would do is you would buy the call that's $596. You would buy the call at $600.
No, you don't gotta go that
I mean, you don't
close.
have to go that close, but you could. It can be cheap.
He said 650.
It's gonna be expensive if you do that big gap.
Okay, so we could do the call at, let's do 630.
Do 630 to 650.
Okay, we'll do the call. We're gonna buy it at 630, and then we're gonna sell it at 650.
Okay.
Instead of paying $4,600, you're gonna pay $770.
Nah.
Oh.
Now with that, your gap in between is $20. So you're gonna put 770 on the line. Your max profit gonna be $2,000.
Now, the way you make your money is, it has to end at your expiration or over your, at your strike price or over your strike price.
Your top strike price.
Your top is 650 at a day.
Oh, okay.
Yeah. So come April 23rd at 4 o'clock, when they're gonna sell it an hour before the market closed. So at 3 o'clock, if they add 651, 652, you're gonna make the $2,000.
Okay.
Now, in between the prices, you still gonna make money, but it's not gonna move like a naked option will move. It's gonna move up just a little bit, but you make max profit if it in or above your strike price on expiration.
Okay.
Now you can still sell it before expiration like you do any other contract, but to get max profit, you need to move it.
So you'll still be in the money. You just won't get the max profit. That's right. Okay.
Right.
Okay.
It won't be in the money like it would be on a naked call. Because remember, the naked call is unlimited gains, and then on this one you got a cap gain. So in the money, it don't move as fast until you get to your strike. So when I did mine, I was moving up like $5, $7, $8 until it got closer to the expiration. It got closer to my strike, and it started jumping.
Okay.
And you can do
now. Does anybody have any questions about what we talking about?
I know.
I'm good now. I got me some research. Get ready for these things to open up on Monday. Got my shopping bags ready.
Oh, Mark, I can send you the video on they call credit and debit spreads.
Okay. Yeah, do that.
Yep.
Yeah, do that.
Yeah.
Okay. So everybody pretty much got a basic understanding of the option, how you trade options and things like that. We talk about naked calls. Everybody understand what a naked call is, right?
Well, we gotta get Latriva up.
Right, because I don't want to go too far ahead of people that's just may not understand.
Right.
So Latriva, you got the
I got a break
understanding of what we were just talking about.
I got the gist.
I got to break off, y'all, so I'll catch up with y'all.
All right.
Okay, Mark.
All right. Thanks.
Yes, sir. Peace. But you say you got it, Latriva?
Yes, I was saying I got it for the.
Okay, so you understand about options?
I don't understand about options. But I was just trying to look. I was just trying to Google as y'all was talking, so I was trying to read about it actually.
Right. Well, we could post some videos in the Discord that may better help you understand it.
Oh yes, please.
Yeah, we do that. We do that from time to time. I'll post some more. After the meeting.
Like what kind of questions you have? You can ask your questions now. Like you got some questions because we don't want to just post videos. Some you might already know, and we just posting videos of something you already know. So
no, honestly, like I was just like y'all know I came into the call pretty late, so I was just kind of honestly reading about options because I was just hearing what y'all were saying. So I don't really have any questions. Oh, I'm not sure why I got an echo.
All right. Well, we're gonna get ready to wrap it up for this week, then.
Yeah, I was just gonna say I got to get out of here, man. I appreciate y'all though.
All right.
All right. Go ahead.
Hey, Latriva, when we post the videos, if you have questions, just put them in the Discord, and then we'll check it, and then we'll answer your questions as you're watching the videos.
Okay, thank you so much.
All right.